Right there we consolidated again, so we didn't really have anything. We had a shorting opportunity right here. I suppose you could say we had a shorting opportunity right there too. Okay, and we had a shorting opportunity there, and there, and there, and a couple of longs right there that I missed. A short there, a short there, a short there, a short there, long, a long here that we took and we got to break even on. That was the last trade that we actually took. Then you get into the break, and let's see, during the break, was there anything easy and obvious? This one right here. That was it during the break. There wasn't a lot of easy and obvious trades. We did do some YBR trades this morning. We were up $325 a contract on the YBR trades. But on the euro, let's see. Our first trade on the euro was right here. We picked up 4 ticks. Then the next trade was right here. We picked up 14 ticks. And the next trade was right over here. We picked up 4 more ticks to put us at plus 22. And that was it for the morning session. And it didn't do anything during the break. Okay, now crude. I'm gonna scroll back here on the crude. Crude was mean to me today. Wasn't my favorite market today. Our first trade on crude here, we stopped out minus 8 ticks. We missed that one, which could have gotten some of it back. We got to break even on that. We missed that one, which would have been a break even. We stopped out on this one to put us at minus 16. We got a break even right there. And that was pretty much it. Crude was not our favorite market today. There was a shorting opportunity here during the break right there. Okay, there was YBR short. A couple of them, one right there and one right here, both which would have worked out. And that was crude this morning. Now the ES, we traded the ES a bunch, but and we ended up with plus 13. But we had 8 trades on the ES this morning that we did. Now let me scroll all the way back here. This was our first trade on the ES. We stopped out on this one right here. Then on this trade here, we picked up 4 to put us at minus 4, because we're at minus 8 right here. This put us at minus 4. We had a break even. Then it got really choppy and didn't give us any opportunity. Then right here was a long opportunity, a YBR long and a BBC long. That worked out pretty well. Here we picked up another 4 ticks, put us at break even on the morning session. Here we picked up 4 more ticks to put us at plus 4. Here we picked up another 4 ticks to put us at plus 8. And, oops, put us at plus 8. And here we picked up 5 ticks to put us at plus 13. And then we had a break-even trade here. And I think that's where we stopped trading on the ES. There was a shorting opportunity right in here. A break-even trade right here. A long opportunity, which was also a YBR trade right here that we missed. And a break-even trade right here that we missed. Then it got really choppy going into the end of the morning session. We had a YBR short right here that worked out. And a YBR short here during the break that worked out. It was also a BBC short. When you get a YBR short and a BBC short at the same time, they tend to work out pretty well. So, yeah. Okay, and that was the morning session, everyone. So, as I said, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 23rd day of September 2020. Made 22 ticks on the euro, lost 16 on crude, made 25 on gold, and made 13 on the ES. Put us up $390 a contract on the morning session. And today, we made $325 in the YBR trades, and we took 4 trades to do that. Today it took 6 minutes and 1 trade to get to the goal for the day. At that point, we're up $200 a contract, and we took a total of 16 trades. On the month now, we're at $10,228. That's over 16 trading days, averaging $639 per contract per 2-hour trading day. I'm on my 152nd consecutive day of getting my goal, and I am at $73,684 on the year. That's over 177 trading days, averaging $416 per contract per trading day. Okay. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes.
Excellent.
I'm ready. Sort of got the YouTube thing working, but doesn't have the proper bit rate, which I know is Greek to everybody, so I won't go into not bore anybody with that. I'll just let it keep sending me an error message. Okay, recap of the recap.
Today it took 6 minutes and 1 trade to get to $200 per contract. Ding.
That's a good bingo. Good job.
Thank you.
Okay.
Okay.
Alrighty.
There, okay. I can see your screens.
You got it.
All right.
Alright, guys. Let's start right here. Let's go look at a daily chart of the S&P 500, Emini Futures. This is the new all-time historic high, and when price can go no higher, it goes looking for support. Resistance leads to support. We found support. Support held, but then the market needed more support. There weren't enough buyers at this price level to support that price, so we dropped almost to the 50% fib, and we're just measuring the last leg up here from the low that started on June 29th to the high put in September 3rd. We almost hit the 50% fib, and from there we bounced back up to the BBC. Now when we approach the BBC from above, we expect to find support like this. Pull back, bounce, pull back, bounce, pull back, bounce, pull back, bounce. Eventually though, one of them has to not hold, otherwise we'd have a stagnant market. And so we got from above the BBC, where we're bullish, anticipating higher prices, to below the BBC, where we're now bearish, anticipating lower prices. And so the whole thing works in reverse. Just as when price pulled down to the BBC and we expect support, when price pulls up to the BBC, we expect resistance. And we pulled up this candle here, we got resistance, sent us back down to support, sent us back up to resistance, sent us back down to support. And yesterday on the show, we talked about the fact that we had made it to the 50% fib retracement. Didn't get there the first go around. Got there the second go around and then some. We actually filled that window of opportunity. And then we rallied into the close. We had a green day yesterday, but a very narrow range green day. And right now on the daily chart, we got red and falling overhead, and the only visible support that we have on the daily chart would be right here, would be this low, this green candle from yesterday. The low there, roughly 32.57, 32.59. So if we jump over to the 30-minute chart, like this, we can see exactly what's happened. We've dropped through the zone at 3280/81. We've only got one more zone left below us, and that's at 3188/89. 88.89. So still lots of room for this thing to drop. But from right here, This low has the potential to be good support. This low has the potential to be good support. And if we do this, we come across here. Okay, we want to get below that low. So we want to get down to about 3268 and about 3262. So why don't we just make that an alert live in real time? We'll do it right here, right now. Let me find a little widget. Here we go. So this will be alert number 5274. Alert number 5274. ESZ 20. Now the idea behind the trade will be if price continues to fall, takes out this low right here. Get rid of that little line. It's bears nothing. So we'll say 3267. Still 3267. And our initial target will be 3265. And then we expect to find support as we come into this area here. So we'll call that 3262. Potential support 3262. And then as we come on down, well, this is where I was just doing some drawing yesterday in a mentoring session. So I'll get rid of those. Okay, one more. Okay, look at this bullish cross here. See, this bullish cross became that support right there. So this alert that I'm putting out right now, live in real time, is to be short 3260. I'll show it to you in a second. 3267 to 3265 initial target. Potential support 3262, this area here. And then again, with this bullish cross, see how price came down beautifully, just right to the tick, right to that bullish cross, and it turned and ran all the way back up. So we have to anticipate that 3257 as potential support. Potential support 3257. And then if we get below that area, 3257, and we've got, this whole area across here, because you see we've got wicks of different lengths, and so let's just cut right across the bodies here. Call that 3230. It's an area. It's an area where you should look for potential support. And then the weekly trading zone, the lowest weekly trading zone of the week, 3188 slash 3189. Okay. So now let me put that in the other channel as well. Okay. Now here's what I just did. S&P 500 Emini Futures. You want to be short 3267, initial target 3265. And then if the market continues to drop, we look for potential support at 62. So you can consider this first target, second target, and then there's reason to believe we could have support at 3257 if we get that low. So one target, two target, three target, four. And then the lowest weekly trading zone for this week on the S&P. Okay, that's how that works. And since we're already on this page, I'll just scroll up and do yesterday. Okay. This was silver. Thumbs up means we got to the target. A red X means we got stopped out. And when you see the little Z's, that means that it never triggered. Price never actually touched the trigger. So the trade was not activated. So there's a long on the NQ. And there's a long on the Russell. Long on the Dow. Long on the S&P. There's a short on the S&P. Long on the NQ. Long on the S&P. This was a short on silver. We had a couple of no triggers right there. Here's crude oil. We have rolled to the X contract to be short 39.65. Now, this little bracketed number that you see above the alert number, see, this is alert number 5,260. This number above, when Valerie does the recap, at whatever point in time she does the recap, this is the current swing high of this move, okay? Now, it's possible that it may have later on gone to trade to higher prices, but we only measure the first trigger. Way back in the beginning of Logic 247, I tried to track multiple triggers, and it's just too overwhelming because important prices, important areas are almost always tested, which means that most alerts that trigger have a very high probability of triggering again. So that was the swing high. So it was to sell 39.65. The initial target was 39.55, and then 39.25 was the next target, and on down. So we made it to 39.36. So from 65 to 35 would have been 30 points. So it's actually 29. 29 ticks, $290 per contract traded. See, Valerie's already done the math right there for you. Okay, all right. This was a long on the NQ. This is a Russell that got stopped out. This was a long buy on the Dow, YMZ20. This was a buy on the S&P. This was a no trigger. This was a buy on silver. No trigger on gold. No trigger on crude. No trigger on the NQ. Then we have a short on the NQ. Then we have a no trigger. And then a short on the Russell. And then a short on the Dow. Short on the S&P. The first trade Sunday night coming out of the gate, 6 p.m. Eastern. That's when this channel opens for business. Not Monday morning at 9:30, where most of the investing world is waiting to go to work. We actually go to work Sunday night, 6 p.m. Eastern. And the very first trade that came out of the gate Sunday night was to be short the S&P at 33.06. Initial target 33.04. And we ended up dropping in that move $687.50 per contract. Okay. All right. And so there we are. So far, that is week 112. You've seen the whole thing. Last week, week 111, we had a total of 68 alerts. 16 of them never triggered. That left 52 actionable alerts. 5 of those were stopped out. So 10% of actionable alerts got stopped out last week. But that's not a typical number because what we've averaged over the last 112 weeks is 20%. Okay, so that was a better than average week. Now, let me give you the recap for this week. I'm going to put that in the right column. Do that. I have to edit this a little bit so it fits the resolution on my screen. Oh, did I grab the wrong one? I think I did. Hang on. Hey, Valerie, are you there by chance?
I am.
You just sent me the recap, right?
Yes, I did.
Okay. Oh, you know what? I copied the wrong one. That's that's why I was confused. No, you did absolutely nothing wrong. It was just me. I copied yesterday's, and anyway. Thank you for being there, and thank you for
You're
answering
welcome.
and for letting me know that it was me, and now I can fix it lickety split. Okay. All right. All right. All right. All right. All right. Okay. Well, now we got it. All right. Here we go. I got it right. So far this week, this thing is stretched too big. Let's shorten it up. There we go. Okay, so far this week. Yesterday at this time, oh, that's previous week. Yeah. Today, Wednesday, 12 noon Eastern, Logic 247. I just scrolled you through individually each one of the alerts. Now, those don't come out all at one time. They come out as opportunity presents itself. Could be 2 a.m., could be 2 p.m. Again, the only requirement for an alert to show up in the channel is because opportunity has presented itself. And you have adequate time to get to your, if it's, unless you're sleeping, if you've got your trading cap on, then you've got time to get to your computer, open your chart. You should never, ever trade an alert just because it's an alert. You should look at the chart, because our goal is to actually teach you how to do this yourself. Now, it's nice to have these alerts that you can trade as part of your learning process. But in our mind, the final goal is that you learn how to spot these opportunities on your own. So this week so far, we've issued 28 alerts, 8 never triggered. There is one waiting now because I just put that one out. So we've had 20 actionable alerts. One guy stopped out. So 5% of actionable alerts have been stopped out this week. Again, that's not a typical number. Typical number is 20%. Okay? So with that, we can move on to the Concierge Trade Alerts. And if you'd like to grab a screenshot, you can do that. So last night I got them out at 9:05 p.m. Eastern. Been running late here the last couple of days. I try to get them out as close as I can to the Globex Open. Sometimes life happens. And so it was 9:05 p.m. S&P, Dow, Russell, Crude, NQ. I haven't done the 10-year notes of late. I don't think we have a lot of 10-year note traders. Probably going to pull that out of the list. There's gold, Canadian dollar, euro, pound. You guys are going to have to give me some feedback if you want those back in there or not. And then there's HYPO silver. Okay? All right. So if you got your screenshot, we'll walk through these real quick. All right. Starting with the S&P. Last night's alert was to belong 33.13. $33.13. Now, we've got a weekly trading zone overhead, so that makes the target pretty simple, because when price rises to a weekly trading zone, we expect it to be good resistance. Just like down here, as you saw price hit the zone, couldn't get through it, try it again, try it again, try it again, finally made it through. Once it made it through, Where did it go? It went right up to the next weekly trading zone overhead, where it found good resistance. Now remember, these numbers go out Monday morning at 6:15 a.m. Eastern, before Wall Street even wakes up. Our traders have an opportunity to get these zones on their chart before the week even starts. It gives you a fixed point of reference, or a fixed idea of support and resistance, because once these numbers are published, okay, on Monday morning, we don't change them the entire week. They're carved in stone. So we went from zone to zone, from 3280 to 3320. We'll leave that about 40 points. At $50 a point, that's $2,000 per contract traded. 2,000 up, 2,000 back down. But last night's Concierge Trade Alert was to be long 33.13. Now on a long Concierge, the final trade to target, always the weekly trading zone overhead. On a short, it's always the weekly trading zone below. Okay, so as you can see, we triggered at 13, ran right up to 20. So that's a 7-point move at $50 a point. That's $350 per contract traded. Now, the alert also said to consider being short 32.86. So the best way to handle this is when the numbers come out, you go to your chart, okay, you put in your line at 33.13, because remember, none of this has happened yet. The alerts came out last night, back over here at 2100 hours, this candle right here, okay, so that's the long side triggering. 32.86, that one triggered the other line in the sand, and there are days when you will see two-sided action. So 32.86. And again, the target is the weekly trading zone below. So from 33.13, we went up 7 points to 33.20. At $50 a point, that's $350 per contract traded. And if you're brand new with us, you should be trading in the simulator. Even if you already have trading experience, you should be in the demo account, learning the methodology, learning the strategy. Now, a person might say, well, how do I know that I've actually learned it? Well, a pretty good acid test is when you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once that happens, that's a pretty good indication that you do understand the methodology, you do understand the strategy. It's at that point, the blueprint, our 24/20 blueprint, will give you the green light to go live with one contract, only one. Now your goal is to increase your account balance by $2,000. Once you do that, you'll get the green light to add a second contract. Now there's a huge difference between the first contract and the second contract. The first contract, you had to fund that with your savings, okay? But the second contract is being funded with profit you earned in the market. That's an indication that you're starting to build a profitable trading business. When it's time to add contract number 3, number 4, number 5, number 10, the blueprint will tell you, but you must always be adding the additional contract with profit you earned in the market. Now, if you hit a rough patch, okay, if there is no profit with which to fund the account, then guess what? You don't add a contract there. You book a mentoring session. We get together We talk, figure out what's happening. We go through your trades with you. Okay, that's part of what being a member at CFRN means, is that you always have someone to help you, almost around the clock. You can book a one-on-one mentoring session anytime. As a member, you have unlimited access. Okay. There's also a room full of traders who can almost always answer any general, basic type question. All you have to do is ask in the discussion group, in Telegram, the private discussion group. Okay? So from 3286 down to the zone, that's 5 points, at $50 a point, it's $250 per contract traded. Now, it looks like the south side here may give us a second opportunity. Price holding here at the zone, getting back above, red and falling. The question is, will it climb all the way up to the BBC before it finds its resistance? If so, that's fine. We'll trade it short there. Maybe it doesn't quite get all the way there, you know. At some point in between, right? Now, price always reverts to the mean. In our case, the mean is green, but as you can see, you get a leg, you get a retracement to the BBC, leg and a retracement, leg and a retracement, leg and a retracement. There are times, though, however, in this case perhaps, where the bearish momentum is so great that buyers won't be able to push it quite that high. So it might get halfway there, sputter out, run out of energy, and then start to drop. Okay? Would that qualify as a second trigger? Absolutely. Can you take advantage of that? Absolutely. Often on multiple triggers here, we'll see some of these alerts. It's not uncommon at all to see them trigger 2-3 times. But there are days where we see them trigger as much as 4, 5, 6, 7 times. Okay? Just remember, important prices, important areas are almost always tested. So both sides of the concierge alerts last night were profitable on the S&P. There was also some logic 247 alerts that I went through in that list. As you saw, those were profitable as well. Okay, so as price pulls back up, we're going to wait for it to find resistance, and resistance will be when price can't go any higher. Now, if it can't make it all the way to the BBC, this area right here, right across this top here.
Just a moment. Here's the map.
I dropped my phone the other day, now it's acting a little crazy. Okay. Asking for the map. Alright, so we'll see what happens if we can get back above the trigger, find resistance, we'll have another short trade on deck. Okay, let's go to the Dow. On the Dow, the alert last night was to be long 27,335. $27,335. Okay. And the swing high was 27,392. So 392 minus 335. That's 57 points. Now the Dow pays $5 a point. S&P pays 50, Dow pays 5. So 57 times 5. It's $285 per contract traded. $285 per contract traded. So obviously by the time you've earned the right to trade 2 contracts, that would be 285 times 2, or times 5, or times 10, or whatever level you happen to be at when that happens. Okay. Now, notice this bullish cross that led to this nice move up. Okay. If we draw a straight line, now the market found support right at that point. Okay. You'll see that again and again, over and over. Watch for that. That will help you tremendously. Price is always trying to get to a weekly trading zone. From the moment the market's open, Sunday night at 6 p.m. Eastern, till they close Friday afternoon at 5 p.m. Eastern, price is trying to get to a zone. How do I know which zone it's trying to get to? Very simple. If price is below the BBC, the green line, okay, bull, bear, cross, below it we're bearish, above it we're bullish. Okay, so as long as we're below the BBC, we believe price is trying to get to the zone below. Okay, when price is above, trying to get to the zone overhead. Okay, now just because it's trying to do something doesn't mean it's always going to be able to pull it off, so to speak. But look at where you see this wick hanging low right there. If we draw a straight line, see that? That low, that high. Okay, so am I saying that on the way up you should have been anticipating the market to turn around and head in the other direction? No. No, what I'm suggesting is that as price was climbing, you should be aware of this powerful area right here, and you should allow for the potential for price to do exactly what it did. Okay? Sometimes price will just struggle at an area like that. It'll consolidate a little bit, and then it'll plow right on through it. Other times, it will do exactly what it did here. So once price got back below the BBC, close of this candle here, right? On this very next candle, you can go short, and as soon as you take out that low right there, you've got nothing in between you and that bullish cross, right? So an entry 27,168, and then we put in a low at 27,003. Okay. When you hear me talk about learning how to read the chart, how to understand what the chart is telling you, these are the sorts of things that I am referring to. Now the short side on the Dow was 27005. We didn't get there yet, or did we? The swing low was 27003. Okay, the alert was 27005. Okay, does that happen? It just did. Okay. All right, let's go to the Russell. Okay. On the Russell, the alert last night was to be long 1495. Okay, buy 1495. And remember, the target is zone overhead on a long. So from 1495 to 1498, that's a 3-point move at $50 a point. It's $150 per contract traded. Okay, from 1495 to the target. On the short side, The alert said to be short 1478. And looks like we just nicked it. 1478. 78. Yep. The swing low was 76.90. Okay. So basically 50 bucks. Nothing to write home about on the Russell on the short side. But if you caught the long side, then you've already thrown your parade. Be sure to clean up the confetti. NQ. Okay, on the NQ. Last night's alert, long 11-213. 11-213. Guys, John really needs your prayers. We'll pray for him before we go. 11-213. Okay, swing high was 22. So we're talking about 9 points at $20 a point. That's $180 per contract traded. Okay. On the short side, 11-048. More two-sided action. 11-048. Okay, sell 11-048. Took my son to the recruiting station yesterday. He's one step closer to his destiny. Okay, important prices, important areas are often, almost always tested. All right, from 11-048, we dropped to a low of 32, so that would be 48 to 32, that would be 16 points. At $20 a point, that's $320 per contract traded, right there. Then we trigger again. This time we put in a swing low at 10,971. So 11048 minus 10,971. That's 77 points at $20 a point. The market made $1,540 per contract available. Now, we didn't make it available. We don't move the markets, our indicators, our oscillators. We have no magical power over the market. Back in the old days at the movie theater, there was an usher, he had a hat, he had a flashlight, and if you got to the movie before the show or after the show started, so as not to interrupt the other patrons, he had his little flashlight which he would shine at the floor. He would escort you into the darkened theater, and you would follow that little beam of light, and he would help you get to a seat without tripping over other people's feet. Okay? He didn't make the movie, he didn't star in the movie, he didn't direct the movie. He just helps you find your seat, right? Think of us that way. You know, we don't make any of this stuff happen. We just shine the flashlight and show you, yeah, you might want to get in here, and yeah, you might want to get out here. And then you take care of the stuff in the middle. Basically, you have to pull the trigger, right? But we don't want you to just pull the trigger. I know some people use us that way. We don't feel used, but some people do use us that way. Just for the alert. I just need to know where to get in, where to get out. That's all I need to know. I don't care about all that other stuff. I could care less about learning how to trade. I just need to make money. You know, that's not our goal. That's not what we're not looking for those kinds of folks. Although nobody knows what's in a man's heart or mind except God, really. But our goal, let me be clear that what our goal is that as you trade these alerts, okay, whether they're concierge or logic, over time, you're going to spot that rhythm of the market, that flow. And pretty soon, you'll start spotting the opportunities yourself. Sometimes even before I do. You'll spot an opportunity, you'll start putting a trade on, and then all of a sudden, you'll hear the sound of the telegram. That's the alert, the messaging service that we use. The little dee sound that it makes. And you're already typing in a trade, an order, and I'm just sending out an alert on. You're like, whoa, yeah, whoa, because that means you're learning how to trade. And that's our goal for you. Your goal for you, well, I mean, that's up to you. And, you know, it can even work this way. You know, maybe you just are looking for some good alerts to trade, okay. But you really do want to learn how to trade, okay. But you don't have a lot of time right now. You got the day job, you got the new baby, you know, you coach the little league team, so you don't have a lot of time. But it is an opportunity to get involved in the markets, to start learning how to trade, to get familiar with the simulator and the demo so that you know when the time comes how to actually place an order. And because you're in the simulator, right, so there's no real money at risk, you're able to put on trades, take off trades, and then if you got to run to the game, right, or run to the day job, it's okay, because whatever happens, again, you haven't gone live yet. See, you won't go live until you fully understand the methodology, the strategy, and you put together those 10 consecutive days in a row in SEM where you reach your goal in 10 trades or less. Now the NQ, that was a $1,500 per contract move, and it looks like it's going to creep back up. It was 77 points, I think it was, $20 a point. We creep back up over the trigger, right? Now I'd like to see it. Now there's no guarantee that we'll get back over the trigger. I would like that much better. If we don't get back above the trigger, there's still a window of opportunity right here. Beautiful. Let's say price just starts falling from here, doesn't make it to the trigger. But we want to get below the step line. We want to get below red and falling. So I could see an entry at about, 11010. Down to 10990. You know, there's between 10 and 20 points opportunity in there at $20 a point. So watch that area if you trade the NQ. Now, buyers may come in. They may push us up. They may try and take price up to the BBC. If so, that's fine. It says it's coming down. Now, if that were to happen, right, that would give you an opportunity to get in potentially right at the trigger. But you're going to have to be patient and see what happens right here. All right, crude oil. Crude has been challenging of late, at least for me. Last night's alert said to be long at 40 bucks. 40 bucks. That's fine, 40 bucks. All right, 40 bucks. First swing high didn't quite take us to the zone. Took us to 40.15, so that's $150 per contract move. Then we got back below the trigger. We triggered again. Now this time we made it to the target 40.20. That's $200 per contract traded. And then on this last one that spiked up, that one ran all the way to, well, it should be 40.65/70. So that's about a $650 per contract move. Okay. All right. Gold. Last night's alert on gold. To be short, 1898. And I messed up one of the alerts last night in Logic 247. Valerie caught it, but I didn't. Thank you very much for catching that. I appreciate it. Short 1898. Oh, 1898. What's the swing high here? 1898.3. Okay, so we know that these are both valid trades. This one, obviously, this one pulled back up. Okay, got above the trigger, dropped again. The only difference on this one, price is on the left side of red and falling. The step line is on the left side. Prices left of the step line, and the step line is left of the red and falling. So that's just a beautiful setup for a short, which took us right down to the zone. Is this a sweet zone? No, that's a zone left over from last week. Okay, so we bounce back, but see, it's still an important area. Once an important area, always an important area. So we bounce back up, get above the trigger, but now we don't have red and falling, we've got blue and climbing, and that represents support. Also, we're above the BBC. See, in order to short, we want to be below that green line. Okay? Only think short below it. Only think long above it, right? But we're not thinking long here because we've got a short trade that we're right on top of. So in this one, could you sell it up here and try to nick a little something out of it before it hits the BBC? Yeah, you could, but I sure don't recommend it. Okay. If price is below the BBC, only think of selling. If price is above the BBC, only think of buying. Okay. Now, after the BBC, you've got blue and climbing. Okay. So you need to get below that too. So if you're patient, the price walking sideways, and then this, and you're watching this happen. You're watching red and falling, become blue and climbing, become red and falling. You could trade this any number of ways. You could wait for a break of these lows. You could even wait for a break of that low. Okay? If you did, that would put you in at about 1874, and you drop to 1868. That's a $600 per contract move. And on silver. Last night's alert on silver was to be short 24.23. There, 24.23. So we're going to take it on the chin here the last couple of days, along with gold. 24. 23. Okay. So, this was a directional move, obviously. We didn't come back and get a second trigger. A $1 move in the price of silver is worth $5 grand. So from 24.23 to 23.23, which is right there, right where my cursor is. From the entry at 24.23 to my cursor at 23.23. That's a $5,000 per contract move. When price found support, it went looking for resistance, which it found at the BVC. Gave us another leg down. Buyers tried one more time valiantly to push it through. Couldn't do it. And we ended up putting in a swing low so far on silver for the day, 23.04. So there you have it. That's the story as the futures go. One more time, a recap this week so far for Logic 247, week 112 on a Wednesday, 28 alerts, 8 never triggered, 20 actionable, 1 stopped out based on not risking more than $300 per contract per trade. 5% of actionable alerts were stopped out. Okay. All right. I don't see any questions in the chat box, so let's go to our good word for the day. Father, we pray for John. He's not well, God. Whatever it is, virus, whatever, we just pray for divine healing for him. He's a hard worker. He loves to work, maybe too much sometimes. But God, we just ask right now that your hands, by the power of the Holy Spirit, be upon him, be in the room with him. Let him know that you are there. That you are there. And we pray for divine healing in Jesus' name. Amen. All right, guys, good word for the day. Now, we talked about success and God wanting you to succeed. He said he wishes that you would prosper in all things, even as your soul prospers. Psalm 8:6 says, you made them rulers over the works of your hands. You put everything under their feet. So, between me and you, it's just the two of us. How can you know God wants you to succeed in life? How do we know this? Huh? Well, I'll give you 3 reasons. Number 1, because he created you. Did you ever create anything that you hoped would fail? Probably not. I know there's these guys on YouTube, the fantastic fails and all that, but, you know, really, no, none of us do. In Genesis 1:26, he said, let us make man in our image, our own image according to our likeness. Now, the words image and likeness are important. Think about it. We sometimes tell a child, you're the image of your mother or father. There's usually spit in there too. Well, you're the spitting image of your grandpa, right? And we've all heard it. Because you are God's supreme creation. He poured into you his mind, his power, his wisdom, and everything else you need to succeed. Once you grasp the truth of that and begin to act on it, Your outlook will be transformed. You'll start thinking like a no-limit person. Because you have worth, this is number 2. Because you have worth. Number 1 was because he created you. Number 2 is because you have worth. Actress Ethel Waters, who used to sing at the Billy Graham Crusades, said, "I am somebody because God don't make no junk." That made it onto a lot of bumper stickers and a lot of t-shirts as well. As the crowning achievement of God's creation, you are the object of his attention and affection. The psalmist wrote, "How precious are your thoughts about me, O God. They cannot be numbered. I can't even count them." Psalm 139:17. Now I said there was 3 things. Number 1 was because, well, the question was, how do you know God wants you to succeed? And I said there's 3 reasons. Number 1, because he created you. Number 2, because you have worth. Number 3, because everything God made was for you. You made them rulers over the works of your hands. You put everything under their feet. Does that mean God will simply drop success into your lap? No. God blessed them, and God said to them, "Be fruitful and multiply, fill the earth and subdue it." Genesis 1:28. God has given you his authority, his creative ability to succeed in whatever he calls you to do. So instead of thinking like a victim, we've got to start thinking like a victor. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.